Hello traders, Cousin Vinny coming to you from theclosingprint.com on July the 8th, 2018. In this edition of your weekend video newsletter, we'll discuss the indices, where they might be headed. They all finished higher last week, with the exception of the Asia indexes, and the Bombay Stock Exchange also closed higher. Most indicators are pointing to a bullish follow-through, barring any caveats or tweets from out of left field to start the week. One exception is institutional sentiment for the New York Stock Exchange is slightly bearish, whereas the NASDAQ is very bullish. NYMO and NAMO are both cycling up from a low. All of the leaders moved higher last week. We've got Netflix, Microsoft on deck with earnings. High-low percent is bullish, turning higher, moving above 50, and the New York Stock Exchange advanced decline blasted out of the red zone last week and finished at the highs. The put-call ratio is neutral. VIX is dropping almost 17% last week, and VIX VXV continued to accelerate lower last week, closing at 0.85. We'll review some of these IBD 50 names. There's quite a few of them that look good for follow-through. We'll also look at some MarketSmith Growth 250 names as well. Finally, we have Bukowski with 5 of 5 green. His CPI signal is mixed green since July 6th, currently at 95.2 and bullish. We have 4 bearish patterns, 79 bullish patterns, and 420 patterns waiting to break out to start the week. Bottom line, most indications are for a more bullish than bearish resolution for the second week of July. Here is the SPY weekly chart, finishing with a bullish engulfing candle, almost a Marubozu. If it had not formed a wick top and bottom, this would be a Marubozu candle, similar to what we saw back here in late February, early March. Last week we pointed out that the indices since the January peak have only had 2 weeks maximum before we saw a bounce of at least 1 week. In each occasion, 2 weeks was the maximum, and we followed through the following week. We complete the pattern again this time around. So now we're going to wait and see if we have 1 or 2 weeks follow through, perhaps 3 weeks. A few weeks back, we had 2 weeks higher and a doji. I'm looking for a follow-through mainly based on the indicators. Now, that's the bullish side of the equation. The bearish side is that the NYSE tick cumulative did point lower to end the week, which is a bit of a concern. As we can see here on the SPY daily, we did follow through. We took out these pivots. We took out a Fibonacci 618 level from this pivot high to this pivot low. We took out the moving average. We're above volume by price resistance levels, but tick cumulative has yet to turn back up. Now this could be part of some rotation. We did see XLV with a breakout last week with price breaking above this pivot high. The next level is just overhead. We did hesitate there on Friday. Volume is increasing. MACD is turning, leading me to believe we're eventually going to take out this pivot. Once we get above this level, then we have the 52-week highs over here at 91. Individual stocks also confirm what we're seeing on XLV in this case. So we're looking for follow-through to start the second week of July. The NASDAQ composite is also cycling higher. RSI is rising. We moved off of the 50-period moving average to start the week. The cycle is turning up, MACD is turning, and stochastics is headed towards the red zone. NASDAQ is more bullish than bearish at the present time, looking for follow-through this week. IWM also followed through back to recent highs, bounced at 382 Fibonacci from this pivot prior to the breakout. Following through Wednesday, Thursday, Friday, Bollinger Bands are opening up. Volume is increasing, MACD is turning and crossing, so I imagine this trend will remain intact. The 20-period moving average will start to climb again, along with price action. Now, the New York Stock Exchange high-low percent also climbed markedly on Friday. You can see the moving average has bottomed. The cycle is turning up along with a lot of other indicators that we pointed out on Thursday and Friday. We're looking for a follow-through. The significance here is that a large majority of stocks broke higher last week. Many of the stocks in your portfolio most likely responded in kind. Price is now back above, and more importantly, the New York Stock Exchange advanced decline continues to climb on this chart. So indications at a minimum are reflecting a more bullish than bearish scenario to start the week. We have the S&P 1500 in this particular case still on a green buy signal, the upper line, along with histogram, which briefly dropped below the zero line to start the week, finishing higher along with price action. 1,500 stocks from the S&P 500, mid-cap 400, and small-cap 600 reflect a bounce and a follow-through more likely than not. This is the front month to the 3-month volatility index, the VIX-VXV ratio. When this is dropping from the green zone, this is bullish for equities. In each case, every time we saw a spike, the follow-through to the downside was a fade the fear moment. Looking for a follow-through in each case, as we can see. Our assumption is that price action will in fact break out and head back towards all-time highs. Now that's a lot to assume. There's a lot of caveats out there with regard to the trade war rhetoric becoming more and more of a headwind for equities. Finally, the McClellan oscillator for both the NYMO, the New York Stock Exchange, and the NASDAQ composite are both reaching a low and turning up. The moving average is what I'm looking at here, the cycle. We can also see in the background the actual indicator pointing to the upside with NYSE and NASI both crossing up. The cycle is up now in the short term. The bond stock ratio is also turning back down, the red line. The moving average continues to drop. That's bullish for equities whenever that occurs. As equities are favored versus the 10-year UST. Commodities like gold continue to bounce. We have a double bottom situation. Back in December, we created a pivot and rose. We're looking for the same sort of scenario with RSI way oversold. This is probably one of your better setups, especially when you have a double bottom, relative strength to be this low. Once it gets below 30 and starts to turn back up, we look for follow-through and momentum to continue to favor the bulls. All of this occurring, of course, with the backdrop of the US dollar moving lower. We have some Fibonacci levels from this pivot low back in February up to the recent pivot highs. 382 would bring us back to some support levels and breakout zone. We did come back to the 50-period moving average. That was our first target over the last couple of weeks on any pullback. We did see buyers step up there with RSI continuing to drop off of extremes, moving back down through 50. This is pointing to possibilities of a continuation of this trend in the US dollar lower. So if that's the case, look for gold to move higher and West Texas crude, barring any news out of Saudi Arabia, to continue to move higher with the dollar moving lower. Real estate shares continue to trend higher inside and just outside of the sweet spot. Moving averages climbing, volume is increasing, and MACD is turning higher. Look for IYR to continue higher. REITs and real estate companies should continue higher as well. Industrials have been improving, which can also be seen in the cycle charts. As we hit these extremes and the cycle starts to turn, there's a lot of people who aren't aware of what might happen. They're looking at this perhaps as a bear flag or this is super weak. And you listen to CNBC, they're telling you that the potential for a move lower is greater. However, whenever we've seen cycle lows like this, it usually led to an opportunity. So that's what we're looking for this week in XLI. XLV, which we already pointed out, the cycle is turning up, so the likelihood that this breakout will continue higher is pretty significant. The majority of the IBD 50 stocks listed this week show a potential follow-through, with most bouncing off of the 50-period moving average. As we can see in the 50 Innovator IBD 50 fund, this is something I plan on buying some shares in going into earnings, so I won't have to worry about how earnings affect these stocks. With money flow continuing to show buying and on-balance volume is positive. So we're looking for AMRC to continue higher. Volume is increasing very near the 1330 breakout level. Antero Resources, another name, following through, nice cup and handle pattern. Looking for a breakout and a follow through. It's 3% above its recent pivot breakout area. Reports at the end of July. Chef's Warehouse, another name that popped up on the relative strength scan. We can see it's at 96 now and climbing. That usually indicates follow through. Egon, another name from the recent watch list, a break above 1423 was our entry level last week. Following through, relative strength line continues to climb and volume is becoming very noticeable. ENTA, another name with relative strength line climbing, is at 99 with estimates being ratcheted up by institutions for the year. You can see it's at 260%. Nice metrics. The company develops small molecule drugs for the treatment of viral infections and liver diseases. Siebert Financial provides retail discount brokerage and investment banking services through Muriel Siebert and Company subsidiary. Nice little cup. No handle yet, but this could continue higher. Fairly inexpensive name. Not a lot of data on it yet, but funds own 12%, and we report on August the 14th estimated. Look for this to head higher, especially if financials start to rise this week. Vanda Pharmaceuticals, VNDA. This was a watch list candidate from last week that's moving higher. Looking for follow through. It reports the end of July. Gets above 2050, 10 cents above this pivot. That could signal a breakout and continuation going forward. Okay, traders, this is Cousin Vinny coming to you from theclosingprint.com on July the 8th, 2018 with your weekend video newsletter. We'll send out the watch list later tonight around 9:30, 10 o'clock. Look for that in your inbox. We'll also highlight a couple of stocks we might be interested in trading first thing in the morning prior to the opening bell. Take care, enjoy your weekend, and have a great evening.